want to welcome our witnesses. This morning we are going to focus on the topic Emergence of Swap Execution Facilities, a Progress Report. The financial crisis revealed some significant weaknesses in our financial sector. One of the most problematic was the over-the-counter derivatives market. As a result, the Dodd-Frank Wall Street Reform and Consumer Protection Act of 2010 developed new rules for the OTC market to insulate both the U.S. economy and the American taxpayer from any future extraordinary losses in this area. In particular, Dodd-Frank mandated that all cleared trades be executed either on an exchange or on a new trading platform called a swap execution facility, or SEF. The Dodd-Frank Act defined a swap execution facility as a facility, trading system, or platform in which multiple participants have the ability to execute or trade swaps by accepting bids and offers made by multiple participants in the facility or system through any means of interstate commerce. The development of SEFs should transform the current trading marketplace by providing significantly greater pre- and post-trade transparency for regulators and market participants alike. In addition, once a trade has been completed, a counterparty should be able to compare the price it receives on a particular trade with the price of similar trades by and for similarly standardized products. This information should also be useful to those analyzing the effectiveness of hedging strategies. Finally, increased transparency in the new trade reporting requirements will give regulators better information and additional tools to monitor the swaps market for possible market manipulation. The Commodity Futures Trading Commission and the Securities and Exchange Commission have both proposed rules to implement the SEF provisions of the Dodd-Frank Act for swaps or security-based swaps under their respective jurisdictions. In addition, because standardized swaps that are cleared must be traded on an exchange or a SEF, Dodd-Frank requires clearinghouses to provide open access to various execution venues. Both the SEC and CTFC have proposed rules that implement the open access requirements of the Dodd-Frank Act to encourage competition in the SEF and clearinghouse market. All of us have a vested interest in making sure these new derivative swap execution facilities function safely, efficiently, and fairly. Hopefully, our hearing this morning will help us understand best how we can accomplish this objective. Senator Crapo and I have invited witnesses that represent a variety of opinions and perspectives to our hearing. Unfortunately, due to scheduling difficulties, the large dealer bank we invited was unable to appear before the subcommittee today. Nonetheless, we hope the conversations we have this morning spur deeper thought on these complicated issues, and we encourage participation by written testimony or comments after the fact, and that both industry and policymakers continue to work together to make our swaps markets the most transparent, competitive, and efficient in the world. I look forward to hearing from our witnesses, and at this time I'd like to recognize the ranking member, Senator Crapo.